All right, my play today is Tesla, the stock getting upgraded by Wolf Research to outperform. The company raising its price target to $360 a share.
Do you have Gordon on again? I mean, there's no reason to be bearish if you're making electric vehicles. Investing in Tesla and EV and green energy infrastructure is the most consequential and important investment theme of the next decade, not only for human life and our existence in a non-burning up world, but also for really neutering the enemies of America, Russia, Saudi Arabia, Iran. We basically fund the people who are building nuclear weapons to destroy our country. So there's no more obvious theme to me than investing in electric vehicles and green energy. And that's why it's such an important part of my fund. And it really, my whole purpose for the next decade will be investing in these themes, because I think there's, once again, no more obvious and consequential investment theme where technology can have such an enormous impact on human life in a positive manner.
In this video, Tesla stock outperforms the market on a down day, another Tesla stock price target upgrade, and believe me, there will be many more to come throughout the rest of this year. Tesla bull Ross Gerber is fired up, and some very disturbing news from Lucid Motors, with multiple key personnel allegedly leaving the company to join, wait for it, none other, I'm not even kidding, none other than Nikola. Yep, that's right, from one dumpster fire to another. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. Tesla stock up 1.5% today, closing around $275 per share, and as I mentioned in the intro, bucking the trend in the wider market, which was a sea of red. The Nasdaq 100 today down 0.75%, Apple stock down almost 1%, Amazon stock down over 1%, Alphabet stock down 1%, Lucid, who we'll be discussing in detail in today's video, down almost 4%, Rivian also managing to buck the trend, up 3.5%, Nikola stock down 4%, and ARK's flagship innovation ETF also down over 1%. Tesla stock clearly punching above its weight, avoiding being dragged down by the wider turmoil in the stock market, at least for today. But now let's quickly read through this article from Business Insider Trading, which alleges many key executives within Lucid Motors, in particular those involved in manufacturing. Prototypes are easy, production is... I forgot the word again. To be honest, key manufacturing executives leaving a company struggling to ramp up volume production of their first product in the electric vehicle space, totally unsurprising. A couple of those folks heading over to none other than Nikola, well, that is a little bit of a head scratcher. As I said, from one dumpster fire to the next. Quote, EV startup Lucid Motors is undergoing a logistics overhaul as it fights to ramp up production without going bankrupt in the process. Several high-level manufacturing and logistics heads have left, including its manufacturing lead. Nothing to see here. The departures come shortly after disappointing first half of the year results from Lucid. Now, to be clear, I wouldn't really call their first half of 2022 disappointing. I would have called it inevitable. Although there are some people who were disappointed. That's on them. Should have seen it coming. At least 6 manufacturing-focused, high-level hires have left Lucid Motors in recent weeks as the electric vehicle startup races to get more cars off the production line. Current and former employees told Business Insider Trading. I think I pronounced that right. The departures, including that of global manufacturing chief Peter Hochschildlinger, hope I said that right, probably not, come as Lucid overhauls its manufacturing processes in a bid to not go in a bid to get its production site at Casa Grande, Arizona running at full speed. Current and former employees told Business Insider Trading that the 6 people who have left were all charged, pay attention, with bolstering Lucid's Arizona-based production. Again, I just want to, for some strange reason, mention that prototypes are easy and production, I just can't think of, what's that word? Production is what? I always forget. I think these guys forgot too. And Business Insider granting anonymity to the folks sharing this detail as they're not authorized to speak publicly about Lucid. Sources were mixed on how their departures will impact the company. Fresh blood and thinking could help the startup along. This is true, but the disruption could hold it back. Also true. A Lucid spokesperson did not respond to Business Insider Trading requests for comment by publication. Those who left include, and again, pay attention here, this kind of matters, VP of Global Manufacturing, VP of Programs, Head of Arizona Operations. Remember, that's where Lucid's factory is. These are all production related. Head of New Product Introduction and Program Management, Senior Manager and Logistics Engineer, and the Director of Operational Excellence. Champion acknowledged his departure to Business Insider Trading, but did not comment further, nor did Peel, whose LinkedIn now indicates he works at Nikola. Jacobs, who is no longer listed on Lucid's leadership website, Hochschildinger, Boyk, and Barber did not respond to requests for comment made on LinkedIn. Internal memos sent to employees and viewed by Business Insider Trading confirmed departures of Boyk and Hochschildinger. During Lucid's second quarter earnings call, CEO Peter Rawlinson, in his delightful, very proper and prim British accent, emphasized the need to boost vehicle production after, extremely surprisingly and totally unpredictably, falling short of expectations in its first few quarters since the company started to discover that production is... what's the word again? Let me know in the comments. Building the air in September 2021, a year ago. Lucid has already reduced its 2022 production guidance twice, and absolutely no one could possibly have seen that coming. Which is why I definitely didn't make half a dozen videos explicitly pointing out there's no way they'd meet their original production targets and they'd be revised down. And if you happen to find any of those videos floating around on YouTube, they're definitely deep fakes and I didn't make them because no one could have seen this coming. It's just shocking, so unexpected. And is now planning on building 6,000 to 7,000 vehicles this year. It made 1,405 in the first half of 2022. Now, in fairness, they could actually be on track. Production should ramp exponentially. 1,405 in the first half of the year. If they do triple that in the second half, which is possible, they'll come close to their target. I wish them all the best. To get things moving, Rawlinson decided to bring logistics in-house. Quote, "We're overhauling our logistics processes and introducing a series of improvements to simplify the system and yet make it more efficient and robust," Rawlinson said on Lucid's earnings call. That includes bringing Lucid's warehouse and logistics operations center on site. With that move, quote, "The whole energy changed," one current employee told Business Insider Trading in August. They also said the executive departures could goose production. They definitely needed to reshuffle everything and do what they're doing now. Can somebody explain what goose production means? I've never heard that expression used in that context. I'm assuming it means make it better? It's not a typo for boost, is it? Maybe I learned something new today. Other than production is hard, of course. Stunning insight, which I'm really glad to have finally learned. At this point in time, I'd just like to make a few comments. It's probably not a great sign that major key executives within Lucid relating to product development and manufacturing production have departed the company. I find it rather amusing that some of them have now landed at Nikola, but let's put that to the side for the moment. Lucid is a leading indicator of how fucking hard it is to ramp up volume production of an electric vehicle or any product, any complicated manufactured product. Now again, I want Lucid to be successful. They have a decent product, but having a decent product, having an amazing product doesn't count for shit if you can't mass produce them. As I've mentioned in the past, both legacy automotive manufacturers and new EV startups both must climb multiple Mount Everests without any food, water, or clothing in order to survive the ramp up to EV production. If they can't do that, if they can't scale multiple mountains without dying on the way, rest in peace. And again, I do need to bring up the bell curve and retail investors. It's been nearly 3 years now that I've been pointing out how difficult it will be for these companies to ramp production. I get told in the comments, "You're just a Tesla fanboy, man. F you, fucking stop sucking Elon's Just trying to point out, it really is extremely difficult to ramp volume production of a complicated manufactured object. The automotive industry is ruthless. I believe that most of the investors who've ever owned Lucid stock or Rivian stock, and I mean investors, not short-term gamblers who are just trying to capitalize on the bell curve, in which case, good on you, probably did very well. But most of the people who believed they were investing in a company that had a legitimate chance of competing with Tesla, in fact, many of them thought this was the next Tesla, over the coming months and quarters are going to learn a very painful and obvious lesson. It's really true. Production really is hard. Most new EV startups are not going to make it, nor are most legacy automotive manufacturers attempting to ramp up their own EV products. I say this now, some people get it, other people's whatever, they're very dismissive. But I'm telling you guys and girls now, don't say I didn't warn you. Tesla themselves barely made it to the top of the mountain. They almost went bankrupt multiple times ramping up the Model 3, but they survived. Big brain engineers, extreme resourcefulness, brilliant leadership, I could go on and on and on. Tesla has made this look easy. And when I say easy, like I said, they almost went bankrupt trying. But now they've got to the other end. Everyone assumes, oh, well, Tesla did it. It's not that hard, right? I'm just going to buy this stock because they said that they're going to make lots of vehicles and I believe them because I'm smart and production's not hard at all. So please, ladies and gentlemen, that's all I ask. Just think. Think first. Act second. And now, let's talk a little bit more about that company that actually did manage to get to volume EV production without going bankrupt and is now doing so with stunning profit margins, ridiculous growth, running circles around the entire automotive industry, including legacy and the EV startups, has industry-leading margins, ridiculous wait times, and a very bright future.
All right, my play today is Tesla, the stock getting upgraded by Wolfe Research to outperform. The company raising its price target to $360 a share. Now, this implies a 33% increase from Tesla's closing price on Friday. The bullish call coming on Tesla comes after the firm also raised its 2025 EV penetration estimate for the U.S. to 20% from 10%. In his note to clients,
Imagine that. Another Wall Street stock analyst increasing their Tesla stock price target again, at least in part on the back of surprising EV adoption rates. Fancy that. We believe that it's going to be twice as many EVs sold in 2025 as we did previously. Twice as many. Therefore, Tesla stock to the moon. This, again, is something I've been predicting since I started this channel. Everyone, aside from the likes of Tony Sieber at Rethink X and maybe the folks at ARK Invest, are massively underestimating how quickly EV adoption takes place. Massively. Legacy automotive manufacturers too, suffering from severe brain damage and or crippling hubris, also massively underestimating how quick this transition happens. I'm telling you guys, it's going to keep happening. Analysts, experts, forecasts, everybody's going to be massively increasing their predictions for how quickly EV adoption takes place. For some strange reason, people just think in linear terms. Oh, it can't go that fast, right? It's not possible. We've just seen an estimate go from 10% penetration to 20% by 2025. A doubling in their estimate. A doubling. It didn't increase by 10%. No, it doubled. And this is a sign of things to come. We're in the early stages of an extremely steep exponential ramp. As I continue to say, I personally believe by the end of this decade, give or take, about 80% of new vehicles produced globally will be electric, and the other 20% will be produced by brain-dead companies who are headed for bankruptcy. Timing could be off by a couple of years either way. I do acknowledge that. There's major uncertainty around materials and resources. But assuming some of those bottlenecks can be alleviated, the short story is most, in fact, the vast majority of new vehicles sold by the end of this decade will be electric. And as I record this, there's very few people you'll find on the planet who think this is likely. This disconnect between what I believe to be an inevitable reality and the consensus thoughts, opinions, and beliefs about how fast this transition happens, that gigantic gaping chasm, in my opinion, is called opportunity.
The analyst wrote that the Inflation Reduction Act is the most, quote, consequential development for the U.S. auto industry that we have seen in a very long time. So Tesla shares moving to the upside today. Dave, since the start of the year, the stock's still off about 22%, but more and more analysts now becoming a little bit more bullish on Tesla on the heels of that new act that Congress just passed.
Yeah, it is interesting. Probably the biggest winner, other than the solar industry, of the IRA. And Master Musk, never one to waste a moment on Twitter, putting out last night, order a Tesla Powerwall battery for blackout protection. Now, the Powerwall, usually not part of the investor story, but he certainly starts, as always, a very interesting conversation here because they are looking at rolling blackouts in California as their power grid struggles to keep up with the heat. And then this ties right back to EVs because we've discussed this before. California goes all EV by 2035 and yet doesn't have the power grid to yet support that or the chargers. So it really goes hand in hand, and you can't help but wonder how many of those power walls will spread around California, and Elon is the winner of both of those stories.
Now, this is a development too. Isn't it refreshing to hear some folks in the mainstream finance media acknowledging Tesla's home battery products and also acknowledging not a lot of investors currently talking about this? As I've predicted, I still think it's going to be many years before investors really start to get the Tesla energy story, but this is a big development. I can't even recall the last time I heard anyone in the mainstream finance media discussing any of Tesla's products outside of their vehicles. And now it's time to hear from raging Tesla bull, Ross Gerber.
Time to discuss EVs with our panel. Of course, we've watched Tesla on the rise and pumping all those cars out. In the meantime, you have other names, right? You have BYD, XPeng, NIO, Ford has been doing so well with the F-150 Lightning, just to name a few. Joining me now are the pros taking a look at this group. Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management, and Seth Goldstein, Equity Strategist, Energy Resources at Morningstar. Thank you both for being with us. Ross, I had a guest on recently, and I was saying how most people seem very positive on Tesla, including you. You've done a great job here, talking about what Tesla has done. This guest in particular was very bearish. Where do you stand, and why do you still think Tesla's a leader and a winner?
Do you have Gordon on again? I mean, there's no reason to be bearish if you're making electric vehicles, because I've never seen demand for electric vehicles in the history of electric vehicles like we're seeing today. When you see the way that oil prices are so unstable and continue to rise, and the effect it's had on consumers and people's personal balance sheets, along with the fact that oil and gas has been weaponized by Russia as a weapon against Western societies while they commit genocide in Ukraine, there's never been a more compelling time to go green, buy an electric, and put solar on your house. So Tesla's production has been very good the first 2 months of the quarter here. We're hoping that there's no disruptions in China in September, and we expect record numbers from Tesla this quarter.
Yeah, and I know you also liked Tesla here, Seth, as you were looking at the group, in addition to a name like Albemarle, which takes a different view into what we're seeing here for EVs. Tell me a little bit about what your views are.
When we look at best ways to play the EV adoption theme, we like lithium as one of the best trends because all EV batteries need lithium as the energy storage component of the battery. So when you're investing in lithium, you're just investing that there will be more EVs on the road tomorrow than there are today. You're not betting on a specific car maker. You're not even betting on a specific battery technology. You're just saying EV adoption will occur and continue to grow. And if you're looking at lithium producers, Albemarle is one of the lowest cost producers globally. They have some of the best resources, which means that they can take advantage of the higher lithium prices that we expect to remain in place for longer as EV supply or as lithium supply will struggle to keep up with massively growing demand.
Just a few quick comments on lithium stocks. Most of you will know I only own one stock, Tesla. Not interested in owning any lithium stocks, but the general thesis makes sense. If EV production is going to continue to scale up, and more to the point, if lithium-ion battery production is going to scale up globally, there's a reasonable chance that companies producing this very necessary material will see increasing revenues and profits. I can't count the number of DMs and hot tips I've got from people. Man, bro, you should buy this lithium stock, and that is going back for almost 3 years since I started the channel. Thanks for the tips, guys. I'm still not interested, but I do understand the thesis. I think it's on solid ground.
And as we look at the group and the demand that's there, right, and I think you're making a great point about looking at not just the makers, but looking at some of the parts that go into this. Ross, do you like other names in the group? I know Tesla has been a name that you've liked for a long time. People seem really hot on what Ford's pumping out, but there's so many names in the group, and even new ones like, that we don't talk about as much, Polestar and others.
Yeah, in my fund GK, we have a 25% allocation to clean energy and transportation currently. And so you have Tesla as our top holding and sort of our main EV, energy play. But then you've got great players in lithium. I think that's a very good point. Lithium is a commodity you want to own. We own SQM, and Albemarle is also a very good company. So, either play I think is good. And then we also MP Mines for rare earths for making EV motors, because that's also a component, and it's based here in the United States. And then, of course, a company like Polestar, which people continue to not talk about, but yet it's like the number 2 EV maker here in the United States. Right now, they're making more EVs than a lot of other people. They just are on track now to hopefully make 50,000 cars this year.
Now, Ross has a fair point about Polestar. Every time I say that, I just think back to some of the poor choices in women I dated in my 20s. At least they were fun. Polestar's like a quiet achiever. Decent product, decent sales, decent production, no discussion. Definitely a quiet achiever. That being said, they're still not a threat to Tesla, not even close to it. But I do need to recognize they're plugging along, they're doing pretty decently. They're miles ahead of most other companies attempting to ramp volume production of EVs. And I think they'll continue to do okay.
And they're wonderful cars. So we've got Polestar, and then, of course, BYD and others in China that are also mass producing and doing a good job scaling their productions.
Just a quick note on BYD, a great tweet here from Ray for Tesla, quote, "This is how the only 2 profitable EV makers in the world stack up against each other in the first half of 2022. Keeping in mind, in the first quarter of this year, BYD was still selling internal combustion engine vehicles. They're no longer doing this. About f***ing time. They're still making hybrids though. So this is a mix. It's not a perfect apples for apples comparison. So keep that in mind. It's not a perfect comparison. But even so, let's read on. Tesla revenue, $35.69 billion, and net profit, $5.58 billion in the first half of 2022 versus BYD revenue, $21.83 billion. So roughly 2/3 of Tesla's revenue, and net profit, $0.52 billion. 2/3 of the revenue, 1/10 of the profit. Something worth considering. And again, I'm not shitting on BYD. They're doing great. They're producing a lot of electric vehicles, but the numbers don't lie. Making EVs, making highly profitable EVs, 2 very separate things. And BYD's business model still unnecessarily overcomplicated. Until earlier this year, they were still making ICE vehicles, plus hybrids, plus EVs. Now, just hybrids, which are actually just ICE vehicles with a tiny battery, and EVs.
So we're seeing the largest percentage of cars being bought EV that we've ever seen in history.
Yeah, and with that, there doesn't seem to be much of a slowdown in what we're seeing for demand, only a rise. And you have some countries that are 50% EVs at this point. We're so far behind, right, Seth?
Yes. The U.S. lags the global adoption average, and in fact is just now surpassing about 5.5% to 6% BEV sales. When you look at places like China, you look at many of the European Union and other European countries, they are having much higher EV adoption rates because the government's acted quicker. They provided more generous subsidies. They've been faster to build up the charging infrastructure that helps alleviate the road trip anxiety that still holds EV adoption back for many consumers. So for many consumers, we see price and functionality as sort of the two barriers to adoption. But the governments in Europe and China have been more proactive than the U.S. to address some of these issues quicker, whereas we've seen the U.S. have just started to pass things like the infrastructure bill last year, the Inflation Reduction Act earlier this year, that will help support longer-term EV adoption and help us catch up.
Yeah, and Ross, still a fan of Elon Musk these days, even with all the press that he's gotten with Twitter and all that, because I had on a great guest recently who was just talking about his vision and just what an incredible company it really is, and how now after the stock split, people are still really hot on the Tesla stock. Ross, final thoughts?
Tesla stock valuation is not out of control anymore. It's actually a really reasonable valuation for its growth rate. I don't want to mince words here because, of course, there's risk involved with investing. But investing in Tesla and EV and green energy infrastructure is the most consequential and important investment theme of the next decade, not only for human life and our existence in a non-burning up world, but also for really neutering the enemies of America, Russia, Saudi Arabia, Iran. We basically fund the people who are building nuclear weapons to destroy our country.
He does have a point. Would this be an awkward moment to mention the majority owner of Lucid Motors? Probably would be an awkward moment, so I'm going to leave that up to you guys and girls. Do your homework.
So there's no more obvious theme to me than investing in electric vehicles and green energy, and that's why it's such an important part of my fund, and it really my whole purpose for the next decade will be investing in these themes, because I think there's, once again, no more obvious and consequential investment theme where technology can have such an enormous impact on human life in a positive manner.
Ross is definitely spitting facts here. It's almost like having your cake and eating it too. If you can identify an extremely compelling risk-adjusted opportunity, not naming names or anything like that, but if this company had extremely, and I mean extremely positive future financial prospects, and in addition to that, was doing something extremely beneficial for all life on Earth, and in addition to that, would help release the vice-like grip some of America's enemies currently have on the gonads of the American people, and not just the US, but many other parts of the world as well, due to energy dependence, oil dependence on fossil fuels. That would be a win-win-win, right? If only such a company existed, I'd love to buy their stock. But unfortunately, no such company exists, so I'm just going to split my money 50-50 between Lucid and Nikola, because nothing could possibly go wrong doing that. Right? So, hope you guys and girls enjoyed the video. Just a quick heads up, some updates to my Tesla stock price targets should be dropping on Patreon sometime this week, so stay tuned for those. And if you're not already a supporter on Patreon, you can join the growing community, over 4,000 members, and instantly gain access to well over 100 exclusive videos and my Tesla stock price targets, plus optional access to my Tesla valuation model. So, I'll see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below, and click the card on screen now to watch the next video.